Lighting. So, I think there's two main keys, if you will, and takeaways from step number 1. It's understanding how massive and how much risk there is here. And then also understanding that the way these cycles always play out is the crisis is exponential. It starts just like this, gradually up. Oh, no big deal. Oh, everything's good. Oh, the stock market's at all-time highs. And then boom, like this. Oh my gosh, the world's coming to an end. I mean, look at 2008. I keep going back there. But it's such a great parallel because we're seeing the exact same things with high oil prices, with the labor market deteriorating, etc., etc., etc. And you look at July of 2008, what was ECB doing? They were hiking rates because they were scared of stagflation. And then a month later, 2 months later, we're in the depths of the GFC, where they've taken rates straight down to 0%. Because we had the biggest financial crisis since the Great Depression. So what I really want to encourage you to do is start paying attention to this stuff right here. Don't wait until we get right there. Fly. Because if you have any exposure to the stock market whatsoever, or if you value your job, or if you value your home equity, if you wait till we get right here, instead of paying attention to this right here, you could be putting your financial future in serious danger. Step number 2. Now let's get into the details as to what is happening more specifically with Apollo. Now, before I go over what just happened, I want to go back in time, just a couple of weeks, and remind everyone, like I did in step number 1, that Apollo was the group that was coming out and saying, yes, this is a big problem. Nobody's marks are correct as far as what they're valuing the assets on their balance sheet, but we are pristine. So there's no need to worry about us. It's just all those other guys. Yep, we admit you really got to worry about. Check this out. Top Apollo executive sounds off an arrogance in private markets. He says, I literally think all the marks are wrong. Like we were saying, this is according to Apollo's John Zito. So Zito predicted that all of these loans that were made by the shadow banking system, to the example he uses is Joe's software company might recover 20 to 40 cents on the dollar. Let me repeat, 20 to 40 cents on the dollar. And that's if they're lucky, and keep in mind, most of these loans were valued at 100 cents on the dollar, just 2 or 3 months ago. You, say George, who was valuing them at 100 cents in the dollar, oh, that would be the entities that actually owned the assets. In other words, if you look up Fox watching the henhouse in the dictionary, you're going to see a big picture of Larry Fink, Blackstone, and now Apollo. But here's the part that's really going to piss you off. Zito also detailed why he believes, I remember this a couple of weeks ago, he believes his own firm private credit business is on solid footing. So you see, it's not just me. No. Loans aren't valued at 20 or 40 cents. We don't have any problems. It's just all of our competitors. Yeah, it's just all those guys. They're the ones that are arrogant. They're the ones that are the cockroach. But whatever you do, don't put us in that category. But now, let's go back to what's actually happening in real time. Here's an article from CNBC. Apollo gives investors only 45% of requested withdrawals. So all these people that asked for withdrawals, a huge amount in percentage terms, relatively speaking. They only gave them 45 cents on the investors who wanted money. They said, well, if we're going to cash you out, unfortunately, yeah, we just noticed it was weird. Just noticed yesterday that we did make a couple bad loans, so we're only able to give you 45 cents on the dollar. So here you go on the key talking points. Apollo's $15 billion private credit fund received withdrawal requests equal to 11.2% of shares. And that's a huge number. A huge number. They say that's more than double. It's 5% quarterly cap. So, what they did is instead of and I don't know how this usually works, but I would have assumed that they would have just given everyone 100% of their money back. The first group that equaled the 5%, right? So, if you're not at the 5% threshold yet, you're given someone 100 cents on the dollar or their money back based on the current valuations. But I didn't realize that what they chose to do is they said, okay, we're going to give everyone who requested money some money back, but we're not going to give you what the valuations represent. We're only going to give you 45 cents on the dollar, too. And by the way, if the valuations were actually done properly, they might not even equal 45 cents on the dollar. And just to emphasize how absolutely shady this is, despite Apollo's efforts to distance itself from private credit peers, what we were talking about earlier by emphasizing loans to large, stable companies. Software is the fund's single biggest sector at 12.3% of its portfolio. And by the way, everyone's focusing on software with these systemic risks, I can almost assure you. Well, I should say the probabilities are very, very high that this is starting with, well, it actually started with subprime auto or Tricolor. And then it moved into the software space because of the macroeconomic environment. But I can assure you that it's going to move into something else. And then it's going to move to something else and something else. Fig, this is going to get way worse before it gets better. If history is a guide, and if you're pissed off right now about how this complete ruse and scam actually works, and if you don't understand the dynamics of it, watch some of my more recent videos. But if you're not pissed off already, then sit down, buckle up, because this is going to tip you over the edge. I can assure you, listen to what they are saying right now. Even as we speak, even as they're giving people 45 cents on the dollar. They say today's decision to give people half their money back reflects our ongoing commitment to long-term value creation for the funds. Wait for it. Shareholders. Shareholders. Are you just delusional, or are you evil? Or maybe are you both? Step number 3. Now, this just got way, way worse. The same guys, the Finkmeister himself, Larry Fink. He represents the whole group of shady characters. We'll call them same guys that got us into this mess, are now telling us that they have a solution. That the solution to scams and financial engineering is just more scams and financial engineering. Oh, that's right. So editor, go ahead and throw up this article from CNBC. And they're talking about now they have an off-ramp for the average Joe investor. Great news. So now, they're providing liquidity in a secondary market, which again, at surface level, the marketing sounds fantastic. This sounds very benign. In fact, this almost looks like the Larry Finkmeister himself is doing something charitable for the investors. Oh, who knew how altruistic Larry Fink was? Until you look at and then you're like, oh, I see the game that's being played. So it starts off with the marketing here with these guys and the shadow banking. And again, I'm just using Larry Fink as kind of the proxy, the poster child. He goes out with all the marketing to the investors. And he says, look, this is risk-free returns. Why would you take 4% in a US Treasury when you could get 10 or 12%? Investing in my fund where we invest in these companies that you don't have access to. They're that good. So the average Joe investor listens to this sales pitch as like, oh, that sounds pretty good. Why would I not want a 10 or 12% return? If what the Finkmeister is telling me is that this is basically risk-free. So the investor gives the Finkmeister his money, and the Finkmeister gives the investor shares. Chet. But then it comes out in the news that those investments weren't so risk-free. And of course, the average Joe now is super pissed off. And he goes back. He says, look, you got to give me my money back. You got to give me my money back ASAP, because I don't know how much I've lost. But I don't want to incur any more losses on this investment that you told me was basically risk-free. But what does the Finkmeister do? He says, yeah. Gives him the finger. Gives him the bird. Your money back? Are you kidding me? Absolutely not. Free Moliday. It's my money now. Investor, you've got nothing to worry about. You've got nothing to worry about. Because we are valuing these assets on our balance sheet, these investments, these loans at 100 cents on the dollar. So just move along there, crybaby. Go complain to someone else. You panicking. But of course, this scares the hell out of the investor. Because he thought he may get 50 cents on the dollar. But now he's like, holy cow, this is even going to get worse and worse and worse. And if this guy isn't giving my money back, now I know how shady this whole ruse actually is. Sonari's petrified that he's not going to get any money back. So, insert the off-ramp, the secondary market. So what happens is the Finkmeister's cousin, who looks just like him, comes in and says, "Oh, average Joe investor, you don't need to worry. Because although these shares, I don't know, may be worth nothing, I am happy to give you 25 cents on the dollar." So the average Joe is panicking. He says, "Fine, I'll take the 25 cents on the dollar." So, the shares that he bought originally now goes over to the Finkmeister's cousin, who, oh, by the way, runs his own private credit fund. His own shadow bank. His own black box. And you may be saying to yourself, "Okay, George, well, where did Larry Fink's cousin get the money?" We'll call him FairyLink. That would be good. So you've got Larry Fink and then FairyLink. So FairyLink, he got the money from all of his investors, all the poor saps that believed him. So he's got investors over here that are giving him money that he's going into the off-ramp, the secondary market, and buying from the average Joes that his cousin already ripped off. But when the shares go down to FairyLink, he is just going to use the numbers that he's getting from Larry Fink and tell his investors that they're actually worth $1. He paid 25 cents. So he's telling his investors that he just made them a 300% return. Slow. And then Larry Fink gives him the thumbs up, the kind of wink wink nod nod. Because he knows that his cousin isn't going to sell the shares. And therefore, Larry Fink can go ahead and continue to value them at 100 cents on the dollar because he doesn't have to sell. So since nobody has to sell and there's no disclosure, there's no transparency, this is just a black box. They can tell you the loan or the investment or the asset on their balance sheet is worth anything they deem it to be worth, but you can see how this ends, because at some point in time, these investors are going to want their money back from FairyLink. He's going to have to sell. And then you have the magic of price discovery. And that's when the whole thing implodes. So just to make sure we're all on the same page here, the Finkmeisters of the private credit world. The shadow banking, the risk-free black box business model, if you will. Say, hey, there's this off-ramp. We are such nice guys that we're going to offer you guys a secondary market so you can have liquidity. Now, we could just give you your money back, but no, that would be unfair to you. That would really be unfair to you. And at the end of the day, we have to focus on shareholder value. So instead, we're just going to give you this opportunity to sell us your shares at 25 cents on the dollar. So again, why do they do this? The strategy here is, the longer they can kick the can down the road, the longer they can continue on with this ruse, some may call it a scam, the more fees they collect. And let's remember, at the end of the day, they can't sell. They can't sell. Because this garbage on their balance sheet, which Apollo was admitting to last week, but just pointing to everyone else, is not worth 100 cents on the dollar. So if we actually had price discovery, where they would have to sell this toxic sludge into the market, they would take, let's say, 10 cents on the dollar, and then the whole Ponzi scheme implodes. But when they add in this secondary market of their cousins, then they can continue the Ponzi scheme. And the only people that get hurt in the interim are the investors. And then, of course, the people that are really, really holding the bag, that will definitely get 0 cents on the dollar, are the investors that go into FairyLink's fund. And of course, most likely the people that are still trapped in Larry Fink's fund. Because he is giving them the finger and unwilling to give them their own money back. But I want to be crystal clear here. The scam in this all isn't necessarily the fact that the Finkmeister will only give 5% back per quarter. That was in the rules up front. The investors should have known that. Now, I'm not saying that he should stick to those rules, because at the end of the day, this is an ethical issue. 2. And this is a moral issue, where the scam, and I think the outright fraud comes into play here, is the fact that these guys have been telling their investors, as of just a couple months ago, that all these loans were valued at 100 cents on the dollar, when most likely they were really valued at 0. So you understand exactly what's happening. And you also should understand that throughout history, this cycle plays out the exact same way over and over and over again, too. And what that teaches us about where we are today is that we are not in the 9th inning. We are probably in the 4th or 5th inning of this crisis. I think it's very fair to call it a crisis. And this will most likely get a lot worse before it gets better. And if you're trying to figure out what you can do to protect yourself, and how you can not only survive, but thrive in these chaotic times that we're living in, with not just private credit, but what's going on geopolitically in the Middle East, with the price of oil fluctuating wildly every single day. I mean, who knows if it goes up to 150, 120? If it goes down to 60, it's all over the place. There's so much uncertainty right now. You've got to have a financial roadmap. You've got to have a financial compass, if you will, to make sure that you aren't a victim of what's going on here. What will most likely play out in 2026. And that's exactly why I set up Rebel Capitals Pro. That's the private investment community I have of contrarian investors. Pros like Chris McIntosh, Brent Johnson, Patrick Tresner, just to name a few. Whether it's contrarian strategies, live stream Q&As, research that you're not going to find anywhere else. We do everything we can to give our subscribers the tools to navigate these tumultuous times. If you want to find out more about Rebel Capitals Pro, put a link in the description below.